Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Tuesday, December the 20th, 2016. And I have the great honor and distinct pleasure of welcoming back to the show Mr. Lior Gantz from Wealth Research Group. And you can find all of Lior's work, along with all his special reports, at wealthresearchgroup.com. Lior, welcome back.
Thanks, Rory. I'm very excited to be here.
Well, I'm glad you're here. And when you and I last spoke, we said we were going to get back together to discuss pensions and retirement funds. And as I'm sure you're aware, the CalPERS pension program, which is the California pension program for state and city employees, the largest pension program in the country, is not doing well at all. They're in terrible shape, and all of the people that are involved in that program, not only are they losing money, they're going to have a really hard time seeing any kind of returns. We just learned recently that Dallas has the same problem. And as a matter of fact, they shut down any lump sum request. People can no longer say, I want my money, give it to me. They said, nope, passed a law, said, can't do that. And this is outside of what we already know, what happened in Detroit, what's happening in Illinois and various other pension programs. This is to say nothing of what's going on with Social Security and the other programs by the federal government. What is your take on what's happening right now with pension programs, Social Security, and just the whole program in general?
Sure. Let's start with Social Security. The program started after the Great Depression, when the workers to retirees ratio was about, don't quote me on this, but it was around 10 to 1. Today it's about 2 to 1. So you got two workers funding every retiree, every one retiree in America. So the Social Security fund should be looked at as an empty glass bowl, which on one hand receives cash, and on the other hand it's funneled out, right, to fund the retirement. So if you have more people that are supposed to get the entitlements, and you've got less people moving money into the fund, you've got a bankrupt fund. And so what does a bankrupt fund do? If it's for coming from the federal government, you will get aid, and the aid would come from the tax dollars of those same workers. So you see the problem. Now, the magic wand is the federal government's ability to just print new currency and bring it to the Social Security fund. How long will that game last? Well, it's been going on for 45 years, so who knows, right? The fiat monetary system, and even before that, I just gotta put it out there that what Richard Nixon did in 1971 was change the monetary system into not convertible into gold, because during the 60s, the U.S. federal government was already printing currency more than it was accumulating gold. And that's the whole point behind what happened. Foreign governments were pressing for an audit of the Fed because they wanted to see that $35 to 1 ounce of gold ratio still exist. And because it was not, he had to just find a solution. And obviously that's what his think tanks and advisors told him at the time, but he probably didn't figure that 45 years later we would drown in $20 trillion of debt. Anyways, that the Social Security fund was an idea of creating a social safety net back when demographics were better. People lived much shorter lives. And so you've got two issues here: the worker to retiree ratios and life expectancies. Centurions, people who are living over 100. There's already 500,000 people like that in the U.S. right now, and that um, uh, I don't know if you know this, Rory, but that age group, 100 plus, is the fastest growing age group in America.
Wow.
It's
I did not
it's
know that.
insane,
That is
and
insane.
that is, and who will fund these people? I mean, think about it. They will retire and then live from all these benefits for 35 years. It's remarkable, and changes are happening in technology, in genetics, and life extension technologies. All these amazing breakthroughs that are happening because we live in such a wonderful world. But um, on the flip side, they are creating a lot of challenges for old ideas that are not from this time. By the way, um, we are focusing a lot of the research at Wealth Research Group on biotech and nanotech going into 2017. Pharmaceuticals, a lot of companies that we are going to profile for our free members, and they're going to be outside of the resource sector. For the first time, we're going to leverage our context and go into companies that have breakthrough technology. We want to just make sure that people are aware of this, and it's these stocks are on their radar, because positioning early with the backwind of the Trump administration just absolutely loving biotech and nanotech, and ready to funnel a lot of research money into these companies, will be a great trend in 2017 for sure. Anyways, you've got the demographic problem with regards to pension funds, Rory. Here's the thing: um, these interest rates that we live, this environment of interest rates that we live under, does not allow pension funds to do what they've been accustomed to doing, and that's invest in bonds. And so you've got serious problems, not only with pension funds, but retirees obviously always think about insurance, right?
Right.
Health insurance. Insurance companies are able to create profits by investing the float. Without getting too technical, you pay a premium in advance whenever you insure anything, right?
Right.
Now, these companies, what they do, they take that money, that premium, and they call it the float, and then they invest that float, that which is basically your money, right? But they invest it for their own profits, tax free. I don't know if you know that. That's how insurance companies work. And then they might pay you back one day, right? If your claim is exercised, right? If you need the insurance, but even if they do, they will pay out in increments. And so, with a low interest rate environment, insurance companies are having a hard time investing that float. And when they do, premiums need to go up. That's one thing. And then, second thing is they're gonna be using every lawyer they can find to make sure they find the loophole of not paying you. So insurance companies are at a problem as well as pension funds. Now, I got to tell you this: the at Wealth Research Group, we've been researching alternatives for current income ideas for retirees for 90 days, and on the website, on the top menu, the left tab is called Wealth Stocks. And so the top special report is called Income Champions, and that's where we skimmed through the entire world of 8% yield stocks, and literally toned it from like 57 companies down to 2 companies that we believe are absolutely worth considering. And the special report is right there. It's free. I think it's very important for the listeners to consider not bonds, but companies, stocks that are built for current income, like these 2 companies that are in the report. And we will feature two new companies going into the first quarter of 2017. So definitely make sure you're on our email list for that one. The idea is simple. If you're 65, let's think about this scenario, Roy. You're 65. You got $1 million set aside that you were banking on to facilitate your retirement. How? You invested in 5% yield bonds, and it's 50K a year. You live 20 years. You got $1 million worth of income for those 20 years off of your $1 million principal. Now you can't have that scenario. So what do? You save up even more, and that's what's slowing down the entire economy. People are not borrowing, people are not spending because of low interest rates. Instead of stimulating the economy, they're deflating the economy. They're slowing it down. So you see 80 million boomers who are thinking, how do I liquidate assets? How do I make sure that I have more cash set aside for retirement instead of what the Fed thought the low interest rate environment would do, and that's encourage people to go out and borrow, right?
Right.
And so with Wealth Research Group, again, we're looking for many alternatives for retirees. One of them is high yield stocks that are in fantastic companies, and two of the areas we focus on are pipeline operators, which are very stable because they just move oil and natural gas inside the U.S. The price of the commodities doesn't really matter because the commodity itself needs to move, and the pipeline operator is like a toll road, right? People drive on toll roads and pay the toll. Same thing with pipeline operators. And the second beautiful thing is healthcare. And obviously, I know I'm speaking to the choir here, but look, healthcare is going to be one of the biggest trends of the 21st century, and companies that are built as RITs, real estate investment trusts that are own hospitals, nursing homes, all those types of real estate that are not available for you and I as individuals, but we can buy a publicly traded company and enjoy a 8.6% yield because all of these people are going to pay rent, and the company dishes out the profits as dividends. So that's one thing. Another solution, I guess, that we're working on is a special type of life insurance, and we'll reveal that in the first quarter of 2017 because we're working closely with many insurance people to understand exactly the nature of the product. But what I can tell you is this is a life insurance setup that is perfect for retirees because it not only covers perfectly you and your family, the money that you put into the fund, into the premium, it stays liquid, so you get that double dipping. Say you put in well, I don't want to get too technical, but it's going to be brilliant, and it's the one life insurance policy that myself and my partners are all invested in ourselves. So we're covered by that same product. So we walk the talk literally. And look, the last thing I got to tell you is I think it's very dangerous for retirees to fully retire at this day and age. I believe that people should stay productive in some sort of capacity by investing in private businesses, by having a rich diversification of assets. Retiring altogether is going to get harder and harder, and you're just going to think that you're going to live a lot longer. So that's important too.
Yeah, I agree that people should stay active. If you don't, otherwise, you may not become a centurion. And not saying that that's everybody's goal, but I mean, I don't know of anybody that wants to leave before their time. And one way of doing that is to stay active, but I don't want to be here if I'm going to be broke, if it's going to be nothing but a financial struggle. So I mean, I got to figure something out. I have to do something. I know that if I'm invested in, if I'm counting on Social Security, I'm losing, period. And
Sure.
I don't even know that at my age, I'm in my mid 50s, I'm not even sure that I'm going to ever see it. So I'm not even counting on it. And, in 2012, Obama came out and introduced the world to Myra, my retirement account, and it kind of sounds like they may take the 401ks, the IRAs, the private pensions, the state funded pensions, and convert those into Myra accounts, which that is terrifying to me as well. And I don't want the government handling anything. I don't want them handling my health care. I don't want them handling my retirement. I don't want them handling anything. And I sure don't want them stealing any more of my money. And the negative interest rate environment that we live in, or the zero interest rate environment that we live in, that is a crushing blow, as you pointed out, to these pension funds, to any retirement. So I'm excited that you are working on some programs to help people. Are you are you doing anything with the LLCs, or is that something completely outside of what you're doing? And how can people get more involved with these programs? Is there more details that you can share at this point?
Definitely. We are actually setting up a whole new separate company that will focus on second income and third income ideas and strategies. Life insurance, like I told you, will be uh, just a whole section inside that new company, and we're rolling this new company out in the first quarter of it's a financial newsletter. We're rolling out in the first quarter of 2017. So I will definitely update you the second that all the information is up, so you can alert your listeners. And what's going to be inside of there is uh, the best places to retire at. That's one thing.
That's good.
So complete reports on the most affordable cities, and not only affordable cities, but cities that have a great social life and many activities and everything you would want in a good retirement, with all the upside of that. The best places to retire at for tax purposes. So that's very important.
Yes.
Um, Places outside the U.S. for people who are looking to retire on a cheaper budget, with many cool ideas on how to do it with your spouse, with your kids if you want to. So that's going to be in there. With regards to financials, we are going to have an entire section about high yield stocks. The name of the website, by the way, is called Portfolio Wealth Global, but it's in the final innings of being going live. So make sure that the best way to get access is just subscribe to Wealth Research Group, our current company that will be focused on retirees for the first quarter of 2017. And obviously, once the new company is live, we will alert our members, or just stay tuned, via the update from you, Rory. The idea is to create this I would say this rich plethora of information for people who are looking for ways to get side incomes, and at the ages of 45 to 65, right? So not
Right.
a not a not a teen or just fresh out of college ideas, but ideas that work for people who are 45 to 65 and above. And then obviously portfolio planning and how to do that, and make sure that you're invested in the right places, and care about your money in the right way, and things to watch out from. So definitely an exciting time, and we will have full special reports with action steps and entire programs, and everything's going to be for free. Um, and so that's coming. That's very exciting for us. We're putting a lot of work into this, and we're looking at everything that's proven to work and easy to copy and apply. Nothing fancy that takes years and years to learn.
I like it. What's the name of the site going to be? Portfolio Wealth?
PortfolioWealthGlobal.com, and it's
Portfolio.
going to be up definitely by the 1st of January. So it's going to have such an amazing wide array of reports. And again, and you know what? We've added a nice feature in there. Not only are we going to put a lot of great places to retire at within the U.S. and outside, we're also going to put in great destinations if you want to travel a little bit in your retirement and enjoy the world. I've been to 32 countries in the last decades, and I love to travel, so I have some great experience myself. But we're going to bring on a team of experts that are 45 to 65 with great ideas on just cool destinations, I guess.
I like it. I mean, that sounds so. It sounds like Lior, that this new venture is going to be geared specifically towards people that are moving into retirement or are retired, and more strategic thinking as far as how to protect and grow their current wealth and to acquire new wealth. Is that about right?
Yes, it's definitely right, and same as what we do with Wealth Research Group. What we want to do essentially, our mission is to strengthen the financial fortress of people that are living under this system that they didn't choose to live under, where your savings are in danger of having their worth revealed, their true worth revealed, and this fiat monetary system is absolutely reckless because
Completely.
it made everyone investors. I mean,
Yes.
you cannot opt out of being an investor, because if you say, "Hey, I'm just going to keep my dollars in an account," well, guess what? The dollar itself is not a measure of value. It's
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 losing
it's
value.
yeah, and it's not a measure of value. You can't value things with the US dollar. You can price them with US dollar, which is what we're doing for 50, 60 years, but you can't value them in US dollar. If you go on debtclock.org and see what the US federal government and the Federal Reserve is issuing, that the price of a silver ounce, according to them, is worth $1,003. If you calculate the amount of dollars and the silver ounces at the it's in circulation. Gold, by the way, is 9,000 per ounce, and I'm talking the federal government's statistics. So
That sounds about
this.
right to me.
Listen, the only challenge with these facts is that they don't come into fruition overnight. And so people are living for years and years waiting for these events to happen, for repricing to happen, and it doesn't work that way in finance and investing. It's so complex, and so that's why Wealth Research Group is there to just create that big picture environment and make sure that you're up to date and have some just golden nuggets, things to think about and maybe apply into your own life if it suits your living. Look, I just got to tell you this with regards to silver. I don't know how connected you are into the precious metals arena, but I bet you do. I bet you are, right? So,
Yes.
I, listen, I want to talk to you just for a quick 2 minutes about something that is so outrageous, so immoral, that even in the worst dictatorships, it shouldn't be allowed to happen. Do you know who is the largest institution, a publicly traded company, that holds the most amount of physical silver in the world.
I would have to say J.P. Morgan.
It is. It's J.P. Morgan that owns 550 million ounces of silver. It is the largest client demanding physical delivery on the COMEX. That's what they do with their right hand. With their left hand, they're the custodian of the SLV.
Yep.
So they see all the trades that everyone is doing. And so what they're doing on the flip side is they're shorting the paper contracts. So they're funding their cheap silver physical deliveries on one hand by shorting with a perfect track record. For 9 years, they've been shorting silver at a great profit. And so you got to think to yourself, why is this bank the largest silver bug on the planet? What do they see? What do they know about the way that the fiat monetary system works? And obviously, many on the board of J.P. Morgan is well connected to the Federal Reserve Bank, and they're
members.
Of
J.P.
course.
Morgan is a member of the Federal Reserve. They are one of the owners.
Of course, they're a shareholder.
Yes.
And so you've got to think to yourself, what can happen in 2017? The opportunity in resource stocks that we've seen in 2016, we've been blessed with great success. I mean, 2016 was the first year the Wealth Research Group had a full year in operations, and we had 4 stocks that went up 400%. We had 3 stocks that went up, 3 stocks that went up over 250%, and 2 stocks that doubled. So our free members have got a great research and email reports that we do, because what we do is we take a 60-day period and we zoom in on an industry and we find absolutely the best company at the ideal price that we want to share with our members, because we feel it's a compelling opportunity going forward. And right now we're in this period with regards to zinc. Zinc is the 4th most in demand metal in the world, and 50% of zinc uses is for anti-corrosion, for coating and galvanizing. And the Chinese are going on a spree of buying silver, on a buying spree like nothing you've ever seen, for the mega projects, for the car industry. And with 2 mines shutting down in 2016, major mines of zinc, and with the fact, and this is important, the fact that stockpiles are diminishing for zinc, and there aren't any primary zinc miners. So it's not like you can switch on and ramp production up. It's a very not monopolized industry. Most zinc miners are byproducts of other metals. So it's not like you can ramp up production and just supply all this demand. There's a real supply shortage. And so, zinc is the top performing metal of 2016. It's up 80%.
Wow.
And so what we did, instead of looking at active companies, we've looked at newly founded companies that are just starting to trade right now, and they haven't gone up in price. They're still at bargain territory. And we will definitely profile at least 2 companies in the first quarter of 2017 to our members. With regards to zinc, we believe zinc is going to be one of those epic bull markets going into 2017.
And all of your analysis and everything that you've just been discussing, Lior, all this information is free, right? I mean, there's no membership fees or dues or subscriptions or any of that.
Look, no, there isn't. It's free, and the reason is we want to get to the largest audience that we can help. I've been a money manager for high-end clients between 2002 and 2009, and then started a consulting firm between 2009 and 2011, and for high-end clients. And I saw that my passion was to help a much larger audience than just high-end clients. And so between 2011 and 2015, I've watched this brutal bear market and resources. And at the end of 2015, I just felt that all the ducks are in a row, and this is the perfect time to create a newsletter that will help people to get exposed to resource stocks and to get exposed to income ideas that will help them navigate through this decade of absolutely experimental money policies. It's nothing short of experimental. It's no one knows exactly what this is going to happen. What's going to happen? That's one of our themes. Is you want to build what's called a 4-season portfolio. You want to be just ready for any condition, Rory.
Yes, because experiment is being kind. None of these items that the central banks around the world are doing. It's never been done. We've never had a global negative interest rate. We've never had zero interest rate policies. It's beyond experiment. It's so dangerous for anyone who has any wealth whatsoever. Even if you only have $100, it's at risk, period, because of these policies that these maniacs have put into place. And they're crazy, and they're playing with our lives. So I'm very grateful for what you're doing, Lior, because I, I I started the Daily Coin for the for some of the same reasons that you did. I want to help people. I want to help people, to educate people on how to take care of themselves, because as Chris Duane has told us for years, there is no white knight. There is no one coming to help you, to
Mm,
save you, to rescue you, except
mm,
for you. That's it. That's the only
sure,
one that's going to help you is yourself.
sure.
And I think that 2017 already is setting up to be a year unlike we have ever seen before. And I
I,
think that
I, yeah, it's going to be a wild one.
it's going to be wild. And I think that there's going to be some peaks and valleys that are going to blow people's minds. I really do.
I agree with you, and the thing to watch now is the broad indices that most people in the world are invested in heavily. S&P 500,
Yep.
the Nasdaq and such. When interest rates rise, asset prices obviously tend to fall, and so it would be a very good idea to watch how these indices are performing with the tightening period and interest rates that the Fed has embarked on with this second rate hike. And there's going to be more coming in 2017 if they keep their word.
Which they
And
didn't
that
this year. Just to be
sure,
clear,
sure,
they said at the end of 2015 there was going to be 4 rate hikes this year in 2016. We got one. That's it. Now they
sure.
said 3. We'll see what happens.
Definitely, but just to make sure, this uncertainty could affect the markets in a noticeable fashion. I would just say this.
Yeah, I think that they're already setting things up to continue their jawboning, and we'll see about these 3 interest rate rises. They've only had 2 in the last 10 years, and they've been one was last week, and the second one was last year at the same time. So their track record is terrible. They've been lying to us for a very long, well, since 1913. I mean, that's how long they've been lying to us. But, uh,
Definitely.
well, Lior, is there anything else that we should leave them with before I let you get back to your evening?
No, I think I'd like to wish everybody just happy holidays and that a wealth and prosperous, a wealthy and prosperous 2017 with good health and just with a smile on your face.
There you go. And we've been speaking with Lior Gantz, and you can find all of Lior's work over at wealthresearchgroup.com. And coming in the first part of the year, Portfolio Wealth
Wealth Global,
Global. And I presume that's going to be .com as well.
for sure. Yeah.
All right. Well, we'll look forward to that. And Lior, I certainly appreciate all your time this afternoon.
Rory, thank you very much. Pleasure.